As we've said at the top, the case for investing in Africa has widely been made, but of course Africa's not a homogeneous industry or entity, so we're going to need help in terms of how to navigate this. Investors not entirely sure of how to approach the African markets at this stage, very much being seen as a frontier market. What would you say when it comes to approaching the kind of untapped potential that this market has on offer?
Yes, Africa has got many countries, 45 countries in Africa. Each country is different. And when corporates want to invest in Africa, they have first and foremost to look at what they are looking for, because each country offers different operating environments and different population sizes and market growth.
Let's take a look at how RMB, actually goes about dissecting the different markets, because you're actually helping investors navigate this playing field at this stage, right?
Yes, definitely.
So let's take a look at how, what kind of factors you're looking at and how you segment and dissect the African investment opportunity.
The key factors we look at is market growth, market size, and the operating environment. Those are very, very important.
If it comes to market size in particular, let's look at that factor specifically, because it doesn't necessarily mean that those companies that are popular are the ones to be looking at, right?
Right.
So let's go into some of that growth potential that is potentially more hidden than some of the other more obvious territories.
You find that some countries, they've got a lot of people, but they've got fewer. Some countries have got more people, but the per capita income is very low. So market size there is not important. Some countries have got a lot of people and also very high growth rates. That is very important.
Which countries stand out in that regard, that offer opportunity on the basis of the growth potential it offers?
Nigeria tops, Ethiopia, Mozambique, Zambia.
Let's hone in on Nigeria, because we know that it's the consumer that the investor is very much buying into, in that scenario. So what kind of, how are you assessing that playing field?
Right, the number of people in Nigeria is very, very important. Nigeria has got up 156 million people, and a lot of them, they are starting to have more and more disposable income, and that translates into income.
So when it comes to investment, are you focusing then specifically on that consumer-related segment?
Yes, it's both the consumer-related segment and also in terms of what the government would do. That brings in infrastructure development, that brings in energy development and all related projects.
Are we seeing enough stride being made in that regard?
Yes, definitely. We are seeing a lot of reform from the governments, especially in Nigeria, focus on infrastructure, energy, and in terms of general reform of the operating environment.
While strides like that are being made, though, when you're looking at the financing aspect of it, we've had many of sub-Saharan Africa's countries increasingly developing, yes, their local capital markets, to improve flexibility and, effectiveness with which corporate financing is raised. How much of a challenge, though, does it still pose?
Accessing finance is one of the top challenges corporates would face in Africa. In that the markets are not well developed, they are not well integrated with the global markets, but there are a few countries where we find that it's becoming easier and easier. These are Nigeria, Kenya, Cote d'Ivoire, and South Africa. And the financing comes through in one or two forms, either in issuing of shares or in terms of bonds.